The US dollar. It's the world's most traded currency. It's the backbone of global finance. But how did a piece of paper from a relatively young nation become so powerful? After World War II, the US was in a unique position. Its economy was booming while Europe and Asia lay in ruins. The 1944 Bretton Woods Agreement cemented the dollar's dominance, pegging it to gold and making it the world's reserve currency. This meant that countries and central banks held their reserves in US dollars, bolstering its value and influence. For decades, the dollar reigned supreme, facilitating international trade and investment. It seemed like the greenback was invincible. But times change. The Bretton Woods Agreement also established the International Monetary Fund and the World Bank, further solidifying the dollar's role in global finance. The US economy isn't what it used to be. The national debt has ballooned to astronomical levels, now exceeding $31 trillion. This raises concerns about the long-term stability of the US economy and, consequently, the dollar. Excessive borrowing and money printing can lead to inflation, eroding the purchasing power of the dollar. This worries investors and governments who hold large dollar reserves. Is the US living on borrowed time, and what happens to the dollar if the house of cards collapses? The implications are global, affecting international trade and financial markets. A weakened dollar could lead to economic instability both domestically and abroad. The global economy is no longer a unipolar world dominated by the US. Emerging markets like China and India are experiencing rapid economic growth and challenging US economic dominance. China, in particular, is pushing for the yuan to play a more prominent role in international trade and finance. India is also making strides with its growing tech industry and increasing influence in global markets. As these economies grow, they demand a greater say in the global financial system, potentially diluting the dollar's influence. The balance of power is shifting, and with it, the future of the dollar. Section 4. The Euro, a contender from the Old World. The euro, the currency used by 19 European Union member states, is a potential contender to challenge the dollar's dominance. It's the second most traded currency globally and already serves as a reserve currency for many central banks. The Eurozone boasts a large and diversified economy, making it a stable alternative to the dollar. However, the Eurozone also faces challenges, including political divisions and economic disparities among its members. Despite these issues, the euro's potential to challenge the dollar remains significant, given its economic influence and global reach. Can the euro overcome its internal struggles to challenge the dollar's supremacy? Section 5. The yuan, China's dragon eyes the throne. China, the world's second-largest economy, is strategically positioning its currency, the yuan, for a more prominent global role. China is actively promoting the use of the yuan in international trade and investment. It has also established currency swap agreements with several countries, reducing their reliance on the dollar. However, the yuan's path to global dominance faces obstacles. China's tightly controlled capital markets and lack of transparency raise concerns for some investors. Can the yuan overcome these hurdles and claim the crown? With initiatives like the Belt and Road and the digital yuan, China is pushing forward its agenda. The world watches as the dragon eyes the throne, ready to challenge the dollar's reign. The future of digital currencies. As the world becomes increasingly digital, cryptocurrencies like Bitcoin and Ethereum are gaining traction. These decentralized currencies offer an alternative to traditional fiat currencies, with the potential to disrupt the global financial system. However, they also face significant challenges, including regulatory scrutiny and market volatility. Will digital currencies become the new standard, or will they remain a niche asset class? Throughout history, gold has been a store of value and a hedge against economic uncertainty. In times of crisis, investors often flock to gold as a safe haven. This precious metal, with its intrinsic value and limited supply, has weathered countless economic storms, serving as a reliable asset when confidence in fiat currencies wavers. In the modern era, as concerns about the stability of fiat currencies grow, many wonder if gold could make a comeback as a dominant form of money. Central banks around the world still hold large reserves of gold, and its allure remains strong among those wary of inflation and currency devaluation. While digital currencies and other financial innovations capture the headlines, gold's enduring legacy and stability cannot be ignored. Will the future see a resurgence of this ancient standard, or will gold remain a relic of the past, overshadowed by newer, more dynamic assets? As the financial landscape continues to evolve, the role of gold in global economies may once again come to the forefront, reminding us of its timeless appeal and the security it offers in uncertain times. As we navigate the complexities of the modern financial landscape, one cannot overlook the seismic shifts brought about by technological advancements. From blockchain to artificial intelligence, these innovations are not just trends, they are fundamentally reshaping how we conduct transactions, manage assets, and interact with financial institutions. Blockchain technology, for instance, offers a decentralized and transparent way of recording transactions, potentially reducing fraud and increasing trust in financial systems. Cryptocurrencies, powered by blockchain, challenge the very notion of traditional money, introducing new forms of decentralized finance that are borderless and inclusive. Artificial intelligence and machine learning are revolutionizing asset management and financial forecasting. Algorithms can now analyze vast amounts of data in real time, providing insights and predictions that were previously unimaginable. This not only enhances decision-making, but also opens up new avenues for personalized financial services. Moreover, digital payment systems and mobile banking are making financial services more accessible than ever before. In regions where traditional banking infrastructure is lacking, these technologies are bridging gaps, fostering financial inclusion, and driving economic growth. However, with these advancements come new challenges. Cybersecurity risks, regulatory hurdles, and the digital divide are pressing issues that need to be addressed. As technology continues to evolve, the global financial system must adapt to ensure stability, security, and inclusivity. So how will these innovations impact the future of money and the global financial system? The answer is still unfolding. What is certain, however, is that technology will continue to be a driving force in shaping the financial world of tomorrow. As we look ahead, the interplay between traditional assets like gold and emerging digital currencies will create a dynamic and ever-changing financial landscape. The future of finance is a blend of the old and the new, and it is up to us to navigate this journey with wisdom and foresight.